Hello, I'm Stephen Carroll. Welcome to your Essential Business Briefing. Coming up, should we be worried about a slowdown in the United States economy? We'll be finding out what the trucking industry can tell us about the health of the world's top economic power. And we explain why an upside-down graph of borrowing costs is causing so many market jitters. So, is the United States heading for an economic slowdown? It's a question that's preoccupying economists and politicians because of a number of warning signs in recent months. But you may also have heard news of low unemployment and a growing economy in the United States. And you'd be right. Cami Nedelec has more.
It's been 10 years of plain sailing for the US economy, and unemployment has been steadily dropping. In April, it hit a 50-year low. Consumer spending has also been strong. But economists are worried that the fallout from President Donald Trump's trade war will bring the good times to an end. In the second quarter of 2019, growth slowed down from 3.1% to 2% at an annualized rate. And this summer, unemployment ticked up a fraction after recent lows. The manufacturing sector is also showing signs of shrinking for the first time in 3 years.
I don't think we're in a recession. I don't think we're close to recession, but I do think the economy is slowing down. And personally, I think the trade policy is damaging both the U.S. directly and a lot of expectations about where the world economy and the U.S. economy are headed.
Another cloud on the horizon. New US tariffs on Chinese imports, which will hit more than 2/3 of consumer goods, including clothes and shoes. If spending drops, a dip in the economy won't be far behind. But the president isn't budging.
We can't allow China to rip us off anymore as a country. We can't allow China to take $500 billion a year out of our country. We can't do that.
Fearing a slowdown, the Federal Reserve has cut interest rates, hoping to reduce the economic impact of the trade war. But the president criticised the move, saying the cut wasn't nearly enough.
One of the industries that can be a good bellwether for the American economy is trucking. It's an $800 billion business with 1.8 million truck drivers in the US. But one body representing the sector says it's facing a bloodbath. Rachel Premack is a reporter for Business Insider who's been covering this issue extensively, and she joins us now from New York. Rachel, good to see you. Can you give us an idea of why trucking is a good indicator of what's happening in the American economy?
So trucking is a really crucial part of the American economy as a whole because 71% of the U.S.'s freight by weight is moved by a truck. So if home building is up, if manufacturing is up, as retail is up, we see trucking also increase quite a bit. So as all these other sectors of the economy kind of struggle in 2019, we're also seeing trucking struggle quite a bit as well.
So what's going on in the industry? Why are we hearing this word bloodbath when it comes to trucking?
So more than 3,000 truck drivers have lost their jobs as quite a few trucking companies go bankrupt. So in the first half of 2019 alone, we've seen more than 600 trucking companies go under, and that's more than triple of the amount of bankruptcies we've seen in 2018, in the first half of 2018. So right now, the trucking industry is definitely going through a bit of a struggle. And that compares to last year, which was an amazing year for the trucking industry. So at this time, truck drivers are seeing their wages go down quite a bit. The amount of work that they were able to do is not possible this year as it was last year. And trucking companies, even large public companies, are also struggling this year as well.
And is that because there's simply less material to ship? Is that the big issue here?
So that is part of it. So we saw in August one of the most important manufacturing indicators in the U.S. dropped for the first time in 2016, since 2016. So that really indicates that manufacturing is struggling for the first time in quite a while. Retail this year has not also gone through some issues. And we've just seen on the whole, these effects from tariffs and trade war are definitely impacting how much material, how many goods, how many sort of things that Americans are buying day to day. That's definitely on the decline.
What about the trade war? How does that factor into what's going on here? Is this one of the factors that's hurting the trucking industry?
Right. So we've seen air freight numbers, which international air freight numbers decline pretty significantly this year, and that's something that economists are tying directly to the trade war. As for trucking, that is something that is also getting impacted by the trade war, and truckers specifically are blaming Trump for his economic policies for these sort of impacts on trucking and manufacturing, and they're connecting his policies with the fact that their livelihood is not doing as well as it was in 2018.
So is there a call, really, from truckers for President Trump and the American government to act on this issue?
I have heard from truckers saying that there should be a bailout or something to this extent. It's not likely that those things would actually happen. So on the whole, the trucking industry has a lot of ups and downs. It's highly cyclical. 1 year will be doing amazingly, like last year, and then the next year there will be a huge decline. So what will happen often is that when the trucking industry is doing well, companies will buy lots of trucks, they'll invest a lot in the space, but then once all these new trucks are added and all these new drivers are added, there's an overcapacity of trucks, of drivers, and that's when we see rates go down. So it's a simple supply and demand issue in the trucking industry, but for some reason, it keeps coming up year and year again.
One of the other developments the industry is facing is automation, the potential arrival of self-driving trucks down the line. Is that something that's also playing into this change in the industry?
So right now, the American Trucking Association is estimating a massive shortage of truckers. And one sort of thing that I hear from truck drivers themselves is that this messaging that automation will hit the industry within the next 10 to 15 years, that's really motivating, I believe, quite a few younger drivers to not get into the space. So right now, the average truck driver is about 50 to 55 years old. So by the time automation really hits this industry, most of those drivers will actually be retired. So at this time, the industry is not really seeing a major impact from automation. There's only maybe a few dozen self-driving trucks on the road right now, and they're all filled with test drivers and engineers and these sorts of things. But down the line, I do believe that the sort of messaging that automation will be hitting the trucking industry in the coming years, that's definitely limiting how much hiring can really happen in this sector.
OK, Rachel Premack from Business Insider, thank you very much for joining us. Well, now another warning signal for the American economy caused panic on the markets in August. The Dow Jones Industrial Average lost 800 points in a single day, and there were sharp falls on other major indices too. The cause, a shift in the US government's borrowing costs, known as an inverted yield curve. It's a market movement that in the past has been seen as a precursor to recession. And Kate Moody joins me now. Kate, your challenge this week is to explain the inverted yield curve. So first of all, what's a bond yield and why is it so important?
Well, Stephen, a bond is a form of debt that's issued by companies or governments, and it's the main way that countries borrow money. A yield is basically the interest rate that investors earn when they buy a government bond. Bonds are issued for different amounts of time and with different rates of return. So it means that longer-term investments usually have higher yields or rates of return to compensate for that longer period of waiting to get your money back and the risk that something could go wrong in the meantime. It means that if you map out the yields on a variety of bonds, they should form an upward sloping curve. This, for example, is the yield curve from a year ago in August 2018. You can see the yield on a 1-month Treasury bond comes in at just under 2%, while if you get up to 30 years, it creeps up to just over 3%.
OK, fair enough. So what does it mean when we say that the yield curve has inverted?
Well, concretely, it means that the interest rate on short-term bonds has suddenly gotten higher than on long-term ones. really it means that investing in the future seems less attractive than in investing right now. And you can see how the trend has shifted. This is the yield curve in August of this year. Now, if we bring up a comparison of the two, you can really see the shift that's taken place over the last 12 months. The measure that's used the most often is the 2 to 10-year curve, which inverted for the first time on August 14th, and that's what really set alarm bells ringing.
So why does this make people think that there's going to be a recession in the United States?
Because for the last 5 decades, every time the yield curve has inverted for a quarter or a period of 3 months, a recession has followed within the next year or two. Now, on this chart, the inversion is shown when the graph drops underneath that baseline, followed by the recession, which is indicated in grey.
So pretty consistent.
It seems to be. In recent history, certainly, that's what it tells us. But there are a lot of other factors at play, including manufacturing, business spending, and, of course, global trade trends. And the fact that so many investors now focus on this inverted yield curve actually means that policymakers could take steps to fend off a downturn, like we've seen with the Federal Reserve lowering interest rates. All that to say that it is a warning sign that should be taken seriously, but as always, with a grain of salt. OK, Kate Moody, thank you very much for that comprehensive explanation of the inverted yield curve. Well, that's it from us for this week. As always, you'll find the best of our business coverage on our Facebook page, France 24 Business, on our website, or you can tweet me with your thoughts at NewsStephen. Until next time, thanks for watching.